The U.S. economy continues on the positive path with more economic data due out this morning. The bond market continues to be rattled as investors switch gears with rates moving higher. Apple is close to reaching 600 for the first time today, while the S&P looks to breach the 1400 mark. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer. I've never said that before, of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. So, of course, Scott, yesterday we saw the market take a break after Tuesday's action. Do you think we'll see it continue to rest today, or will we see it break through resistance?
Lately, it's hard to hold back the market, and we saw a huge move on Tuesday. So yesterday was quiet, but quiet is good sometimes. Digestion is good sometimes. It shows you that people aren't in a rush to sell, that dip buyers are right there. And yesterday we had one of those inside days where we held higher, went sideways, and I think we could have another one of these type of days, but I do think they're going to try and knock on the door of that 1400 in the S&P.
All right, well, speaking of the S&P, let's take a look at the chart and just see how it's shaping up for today.
Okay, let's take a look at the trend, and the trend has been strong. So if you go right here to the chart of the S&P, I'm not even going to talk about this gradual chart that macro investors have had nothing to fear if you've stayed long. This has been the momentum trend, the momentum accelerated uptrend that's been intact. You had a little bit of a shakeup about a week ago. We held this 1340 area, then we snapped back really well. And then on Tuesday, we took out the prior highs. You had excitement, you had shorts covering, you had a lot of people get involved, you saw a lot of the headlines, and yesterday was nice. Nice digestion day, didn't take back too much of that big move. So a little sideways action holding above this 1388 level would be healthy, and then we take out this high, and then we see the psychological level of 1400, and the next technical level to me is like 1404 to 1407.
All right, well, the real story right now has been the shakeup in the bond market. Bonds, of course, selling off. You went long TBT on Tuesday, and treasuries are continuing to slide. So what is the trade today?
Well, there's a big debate on whether or not finally will bonds sell off, will more money go into equities, can rates rise sooner than the Fed says in 2014, and with all this positive economic data, with the series of news that keeps coming out like we have to watch today at 8:30 with claims and the Philly Fed or the manufacturing data, you're going to see some more support here, and that could continue this trend. For me, I try not to make it too complicated or sophisticated. And I consider myself a cocktail napkin technician. I look at levels. A lot of people have been trying this trade. They've been saying, oh, everyone's been trying to buy this for 4 years, 6 years. I'm like, you know what? I could try and time this thing. So on Tuesday, I looked to break above a level. So if you simplify, look at the TBTs here. All right, I'll give you two little looks on it. Okay, first of all, look at this lower wedge, not even lower wedge, this like almost like saucer type pattern here or channel. So when it cleared this 1970, you look at resistance going across, I said, I'm going to get long the TBTs. Finally, this could work. Maybe it goes all the way to 28, maybe it goes to 30, but for right now, you've had a nice 2-day trade, looks to fill this gap up to about 22. But then if you look at the monthly chart, which is what's getting people excited, that's almost nothing. Okay, that's this little line right here in the TBT. So if this trades for real and it's going to really methodically move up over the course of the next few years, you could see a nice move to 28 here, because look where these came from. And if you flip it over, TLT, some guys like to be short instead. Same thing went here. Look at this chart pattern, okay? Here is a rounding top. You have high, lower high, lower high, lower high. Here's the moving averages curling lower. So when this broke below this 116, 115 area and closed below big time support, the good book tells me get short. And if you did get short, you got paid yesterday. And here's one support, which comes in right around this area. And then this is bigger support where I would say cover it. And then we could judge the bounce to figure out whether or not, if you look at this monthly chart too, there's a lot of room to the downside here. So I think the bigger picture is what people are trying to look at and how to really manage their funds. But I think if you're well balanced between equities and bonds and you just switch gears at key inflection points, you'll provide yourself some alpha.
Well, in terms of economic data, now the Philly Fed number is going to be out today. It's expected to show a modest expansion in activity. Of course, Michigan sentiment due out tomorrow. My question, Scott, is what could have a bigger impact on the market? Those numbers coming above expectations or below?
I'd like to see them in the sweet spot. Just be in line. Right now, in line is probably best, because if they're too strong, people are going to say rates are going to go up too quickly. The Fed is never going to come back with QE, so the punch bowl is going to be taken away. So I think as long as we're in line to a little bit positive, the trend can continue. If all of a sudden we get a really bad number, I don't think people get too shaken up, but if we see some continued bad numbers, maybe, we sell off and we correct a little bit. But right now, they've been pretty much in line.
All right, let's talk Apple. New iPad, of course, coming out, and it's approaching that $600 mark. Will we see new highs out of Apple?
Well, we're opening at new highs now, and this has just been an unbelievable vehicle. Lately, for me, it's been getting a little too fast to trade, and I'm a fast money trader, so that just shows you how fast it is as an investor. Every sale has been a bad sell, obviously, when you have a stock hitting historic highs. Valuation-wise, it's still cheap. Chart-wise, it's hard to get involved now. If you look here, it's extended, in my opinion. We talk about tradable patterns. This was the first time, or after earnings, that you could have bought it when it held this gap. This is when we talked about it for an investment or a core trade. Here's when it extended above this area. You had a nice move, held the 10-day, another nice move, held the 20-day. This was your last viable pivot right around this 550. And since then, it's extended really nicely. I sold my Apple yesterday, the one that I had overnight. Today I'm coming in flat, and I'm probably not going to trade it unless I see some type of pattern for a cute short. But anyone trying to be cute and short Apple is getting really ugly quick. But here's 600. We probably tag it today. The question is, can we hold above it? So as a trader, if it's too fast, ignore it, watch it for the market. As an investor, even though it's at 600, I still think you could see well north of this at some point later this year, so stay the course.
All right, well, in terms of Amazon, some big names sold out of Amazon in the fourth quarter, sold out of their positions, namely George Soros. I'm wondering, at what level would Amazon be attracted enough for smart money to get back in?
I think the smart money is talking big PE on Amazon, that it's too ahead of itself, especially considering it's missed the past 2 quarters. Now, the bullish side is they've missed because they're trying to put in call centers, expand, get ready for future business. On the negative side, though, I would say a lot of people, a lot of big, like Target or Walmart, they have their own ordering service. You don't have to go to Amazon to order. And then you talk about the Kindle, which was supposed to be an iPad killer. They weren't even going to make money on the Kindle, let alone, I don't even think they're selling them. So this quarter could be a doozy, and the chart right now, if you look here, is showing weakness to myself. It's definitely lagging the market. Look where the high was back in October. You have a lower high, another lower high. You have a series of lower highs, and now we're getting into an apex. Chart watchers love apexes because when they resolve, they finally get a move. So if you don't want to predict or have an opinion, above 188 and you jump on this train for a move to the upside, and then you have almost 200 and maybe it snaps back if they start to fire on all cylinders. But to me, I'm leaning more to the downside. If it can get below this 178 or 175, I think that you could see a move to the downside here. And if you look at the monthly chart, you'll see there's a lot of room underneath here. So we break below this 175 area. I do think that this stock could be the Netflix of last year, where it comes down and they take the valuation out of it, and the next big level is 100 to 120. If someone said, Scott, you have to pick a direction, close your eyes for 3 months and do something, for me it would be short, not long.
All right, well, there's lots of questions and concerns about China, of course. So do you still see value in tech in that region? What do you do with a stock like Baidu?
Baidu has been a little tricky lately. It snapped back to the trend line we talked about, potentially breaking above. And you know what? I tried it yesterday. I tried buying it at 140, and it was so weak. And I lost a little bit of money and got out of the way, but that shows you how, if you listen to the stock action, you don't get too hurt, because we were trying to buy it. The futures were going up. It wouldn't, so it went negative. I'm like, you know what? I'll try it another time. So if you look here at the pattern, as far as technicals are concerned, it's at a key inflection point. Here is this downtrend, right, that it's been brushing up against many different times, and it hasn't been able to get through it. So it's been more of a short than a long as it has approached this area. And yesterday, it failed again. I tried it. Thought maybe it was holding higher, it'd be okay, but you know what, it failed. And now you have this small uptrend that it's been riding also. So I would say below 132 to 134, it could resolve to the downside. If it just needs a little bit more time, above 140, 141 with the close, it's a buy. But again, the search, like Google, some of those stocks have been a little bit out of play. There's talk about China, with a bit more of a hard landing. So psychologically, the Chinese stocks aren't just going to the upside. So at this point, it's like a wait, see, neutral, and when that range resolves as a trader, you jump on it. As an investor, you're probably up a lot of money depending on when you bought it. Just be a little bit hedged there, maybe with some puts, or do some kind of collar trade.
Now I'm wondering how you make sense of a stock like Google, where it's really headed. What's your game plan with Google?
Well, Google's been tricky. It was my 2012 stock of the year, and so far it hasn't performed. Last quarter, it came out, it was disappointing. You know, as a macro investor, it's okay. It's been just consolidating as a trade. It's been a little choppy, and I've been trying to avoid it, only trading it a few different times. If you look here at the chart, you will see that the stock itself, okay, looked as if it was going to break out and go when we talked about it in the beginning of the year. It tried and then came back real quickly, showing you that it could be a little weak. Here was the day right before earnings, and on earnings, it missed. You had a big gap down. But if you were an investor and you were cost averaging your position, we talked about the 200-day, that's where it was at the time. So you're doing okay. So fast forward, here we are. You're still in this sideways channel, very choppy, no follow through. Guys are getting upset, trading it. You know, I guess if it can finally get above 620 and change, maybe, and close above there with some volume, it could be back in motion for a move back to the highs. But I'm avoiding it right now. I think macro investors, stay the course. I think the next few quarters will prove to be strong for Google, and this high is not the high of the year. So as an investment, hold it. As a trade, you know, it's been a little bit hard to deal with lately.
All right, and really quickly, we all know Netflix has had a tough year. Many don't think the company's missteps are over. Is there more downside to come with this stock, Scott?
Well, this stock has been one of the best vehicles of this year. Last year, it got crushed. Last year, it broke its uptrend. Finally, some of the shorts got vindicated. But this year, you know, remember we talked about that lower area to ignite above 75, and it had a nice run from 75 to 130. So we're trying to figure out whether or not it can continue, and I do see a descending trend line forming here for a potential trade. So if you look here at Netflix, this was earlier in the year. I think I was right on Bloomberg, and it ignited. The stock was trading around 80. I'm like, I think it goes to 110. Well, it went to 130. But right around this area, if you look closely, you had that outside day. Remember, it traded through, came back below. That was your short entry or your way to get out of a major move. And since then, it's been in a descending formation. Okay, so it's been like out of play, been weak, not really much going on. So at this point, descending channels do typically break to the upside. So I would say do not try this long until it breaks this downtrend. You know, and if it wants to continue lower, it has support going into about 90. So I would say at this point, I haven't traded it in a while, but if I see some type of big volume, you know, and it starts to trade above 110, I think maybe it continues the move that started, you know, way back when in the beginning of the year.
All right, well, we're going to have some fun with casino stocks next and talk about how you should place your bets right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, we're going to talk casino stocks now. I want to talk Asian-traded casino stocks first because we did see continued signs of growth out of Macau recently and a bullish view on the industry by Deutsche Bank. Is this where we should be focusing our efforts, Scott?
I think so. And for a macro investor, you've been getting paid being long these casinos. And as a trader, if you've been following along, you've had some nice ranges to trade recently. At this point, if you look at LVS, look at the chart here. Nice pivot, nice little wedge after a big move from the lower buyable level of 44. At this point, I do think it can continue higher above this area for a trade, which to me is 56.20. I think it then tries to take out this previous high. You look at the monthly chart right here. Again, just starting to leave this channel, the sideways channel after a big move. So to me, I do think we could still see 65.70 this year, and it just needs to start getting back in motion after this digestion. So 56.20 is pretty important there.
Now, Wynn has been trending higher. This is not a cheap stock, Scott. So is this worth a buy and where?
Wynn has been under pressure ever since that shareholder lawsuit. They're still grappling over the land, you know, out there in both Macau and in Singapore. So it had some nice action about a month ago. It reached our measured target of 130, 133. And since then, it's been consolidating. I still think it's okay. It's been a little choppier this year. It used to lead this group. If you take a quick look here, you will see with Wynn. I have some markups on there already. Remember we talked about how when the trend changed in Wynn, and that was way back when it put its top in here, they needed another high, and then finally it turned into a really good trade about a month ago, and Jim Cramer actually went over it on Off the Charts, which we sent over. Here's your buy. Right above this 117, 118, gave you a nice move to 133. Since then, consolidated, it's back on its way. I would be in only a tier 1. I don't love this one because of some of the overhang. I think you should stick with LVS, but as a trading vehicle, I think Wynn is okay.
All right, well, Caesars Entertainment, exciting newbie. Shares climbed 17% yesterday. There's news that its quiet period actually ends on Monday. So, Scott, what are the target levels you're watching?
This one has been something good to watch, and it's different, obviously different than an LVS. So when it's a newbie, it's an infant, it could have a huge future in front of it, and typically you get really big winners from IPOs but sometimes it takes 6 months to a year to get into accumulation where you have a base that's trustable. But for right now as a trade, I like it. Yesterday I bought it, I tweeted about it, I blogged about it. You take a look at the chart here. This was that first day, went as high as almost 18. Pulled back methodically in a very tight fashion. Then a range got tight again. So I saw it perking up yesterday. I bought some here. I added, through this 1192, and I think this could get to at least 14, 15 just for a trade. But then at some point it could take out these highs, and I think in the next few years, this stock and this, and this group still has potential. So this could be something that if you buy, tuck away, it could be a big winner longer term besides just shorter term.
Now, some have called MGM the most attractively priced casino stock right now. Do you agree with that, Scott?
That could be true, and I think that one has the least Chinese exposure. And I think people are thinking of MGM more as a U.S. economy play. That as the economy gets better, as the data keeps coming out and the consumer continues to get firm, that people are going to go to Vegas, businesses are going to spend for conventions. And MGM had a great move. We talked about it from 11 to about 14. Since then, it's been consolidating, and I see another trade developing here as well. So if you look here at MGM, you will see that the stock had a really nice move already this year. Okay, this is when it broke this downtrend. We've talked about MGM many times also. Right here, here is your ad when it cleared resistance of around 1250. This was your little pivot pullback. Okay, this descending channel, which it broke above yesterday. I think you'd be in tier 1, stay with it, and at some point it does break above 15, and this stock, in my opinion, could take out this old resistance, and you could see 17 to 19 on MGM as an investor. Right now as a trader, it doesn't move as fast. It can't be your focus, but if you hold like 12 to 16 positions, this could definitely be one of them. All
right, well, really quickly, Scott, Treasury markets seem to be telling us what stocks have been telling us for a long time. What's the TBT TLT trade?
You got to be long TLT, you got to be long TBT, short TLT. If you went long TBT on Tuesday into this gap open, I would sell some, but continue to stay with the trade. The next big resistance is probably 21.5 to 22.
And gold still weak. How are you trading GLD?
I'm not, but it's been weaker. It's been in a void ever since the Fed came out. If you want to take a quick look at the chart here, I tried to show everyone a few different times. Look at the potency of this down move, okay? That there is when gold changed, and then you had a small little snapback, never took back even a third of that move, showing you strength to the downside. So if you take a closer look here, I look at technicals, and I look at opinions, and I look at what people are saying about everything around the world, but you know what? This move is now in control. Couldn't even take back a majority of it. This is what happened Fed Day. I guess you could try and trade it and look at support. Here's support for GLD. This would be a spot to maybe cover a little bit, and then you have bigger support around 155, and then the low of the year is right around here if you can get to it.
Okay, and one of the bright spots in the financials, of course, JP Morgan.
Yeah, JP Morgan is the leader of the group. It tends to act very well. Yesterday, it absorbed Tuesday's gain very nicely. I think it has higher prices. Just want to show you real quickly the difference between a leader and a laggard. I know these are supposed to be quick hits. Look at JP Morgan. Look at the size of this move after the breakout Tuesday. Digested very well. If it goes above this high, it could continue. And then you look at something like Goldman Sachs that had that news yesterday about the op-ed and about them being a bunch of you-know-whats. Anyway, it gave back a lot more than Tuesday's move. So that just shows you have to be a little bit more careful here than with a leader like JP Morgan.
Okay, really quickly, Intel.
Intel actually put in a little bit of a topping tail yesterday. I'm not going to get too concerned about it, but here's your nice tight base. It tried to extend above, closed on the lows here. I still think as an investment, you could hold Intel for higher prices. As a trader, you get a few trades a year, like you got to trade here. Okay, and then remember we had this little trade right there, but as a trader, it's not that sexy. It's just, I think, a macro hold in your portfolio.
And Target has had a big move in the past couple weeks, so could it use a break?
I think you can, and I tried to short it yesterday. I'm short Target. It's not the right trade, hasn't showed it to you yet. We tried giving you a strategy to be long, which we have, and if you look at it, it's been an unbelievable move. Ever since it broke this downtrend right here and cleared this 54, it's been a different stock. This was your last buyable pattern here in this flag. And now it's extending. I'm just trying to be a little cute here, and this is not something for everyone to do at home. If you're long target, I would take some off if you're in a tier 2 or tier 3. As a trader, it's giving you no sign to short it yet. I did short a little bit yesterday just to see it. I do think at some point it could come back down and test this moving average of about 57, and then that would be my trade. And it's just another trade within my portfolio of stocks, and I've been very long, so I needed something to switch gears with.
All right, great. So, Scott, what is your theme of the day today?
Theme of the day is not to do too much, that we're going to digest just like yesterday. Maybe there'll be a few stocks that show their face for cash flow. I do think that quad witching is coming up on Friday. Things tend to be a little wacky because of the vested interests out there. Well, anyway, just don't do too much. We've had a nice move. Don't start chasing situations. Don't start revenge trading if you've been short and you've been rolling it up. Just take a step back, rebalance your portfolio, whether it's bonds, whether it's equities, and then over the weekend, take a look back and then I would say switch some gears and then approach next week with more of a plan.
All right, sounds good, Scott. Thank you so much, and happy trading, everyone. Have a great day.